All right, now item 10B, adopt a resolution accepting the city's comprehensive annual financial report, report on Measure A funds, and a report on Transportation Development Act compliance for the fiscal year ended June 30th, 2016.
Mr. Mayor, members of the City Council, this is an opportunity for the annual review by the Council of the city's audit. This audit is for the fiscal year ending June 2016. This is really an opportunity for not a staff report, but for communication with the city's independent auditor. And I would like to introduce to you David Alvey is the audit partner for Mays and Associates. Mays has conducted this audit, and as you recall, this is the first year of their auditing for the city, and so I would like to introduce David to you for his presentation.
Great. Good evening, Honorable Mayor and members of the Council. We're here today to have you review and approve a couple documents today, probably the most important being the CAFR, or the Comprehensive Annual Financial Report for the fiscal year ending June 30, 2016. And my firm, Mays and Associates, is independent from the city, and it's really hard for us as auditors because we have to work with finance staff, but we report to the council. And we want to make sure that the policies and procedures that are adopted and approved here are followed through by staff. And this is our first year working with the city, and it's always good to go out to the market and get maybe a fresh set of eyes to come in and look at the city, because not all audit firms operate the same way. Some firms have different styles, different approaches, and unfortunately you don't want finance staff to get accustomed to those styles and approaches or try to anticipate them. So we have our audit broken up into different phases, an interim and a final phase. The interim phase, we were here in July 26th for the week, or 25th for a week, and during that phase we really focus on internal controls, and we want to see really good segregation of duties. If somebody has physical access to an asset, we want to make sure they're not recording it on the books, because that's a potential problem that somebody could be fraudulently reporting something. And then during the final phase, we come out, and that's when we really focus on the balance and get the actual CAFR produced. And during the whole phase, both interim and final, we do a risk assessment approach where we look at the city's assets, liabilities, and everything on a risk basis. What's more risky than not, or than other things? And then during that phase of the audit, whatever we find out, if internal controls are good, then maybe the risk goes down. If they're bad, it goes up. And we do a brainstorming session with the whole audit team, from the right out of college associate all the way up to the partner, and we break down what areas we think are risky, and then we do a tailored audit plan to mitigate those risks. Our audit was also conducted in accordance with government auditing standards and generally accepted auditing standards issued by the comptroller. And kind of the bottom line, and really the only piece of this document that my firm owns, is page 1 through 3, and that's our audit opinion. And so I'm pleased to say that it's an unmodified opinion. That's the highest level of assurance, and all the financial statements are fairly stated with all material respects. And that's a real testament to sound financial reporting and good controls within the finance department and the city in entirety. We do have an emphasis of a matter paragraph that we'd like to bring to your attention. So this is something new. This is something that only happened this year. And kind of like what I said before, where you have different auditors come in with different approaches and different viewpoints, we had to actually restate beginning net position for the other post-employment benefit liability that was on the books last year. So that would be benefits that retirees receive after retiring, like medical, dental. Because the city pays into a Teamsters plan, which is actually a defined contribution plan rather than a defined benefit. So let me explain that just a little bit. So the city is on the hook to pay a certain dollar amount. That dollar amount goes into the trust, and then those monies are used to pay a certain flat dollar amount to retirees to cover medical benefits. If the money that the city pays in is not enough, if medical, skyrockets 30 years from now, the city is not on the hook for any additional monies going into the trust. Whereas a defined benefit, where no matter how much it costs, that benefit is promised to the employee no matter how much it costs. So long as the city pays those into the Teamsters plan, this trust, there's no other liability on the books. So that was a pretty substantial item that I'd like to bring to your attention. A couple other things in our audit opinion. 2 new Governmental Accounting Standards Board's pronouncements. I'm not going to go into them in real detail. GASB 72 has to do with fair market value. So it really, it's disclosure only in the footnotes. There's no financial statement impact, not like GASB 68 and putting that pension liability on the books. And it really does, it just brings into the limelight what management is using to value cash and investments, mostly investments for fair market value. Whereas a level 1 to level 3, a level 1 meaning that you can go out on the stock market and figure out what the value is now, or level 3 would be something more specific, like a appraisal, something very specific to the city. And then GASB 82 was just a cleanup of a couple of things in the pension GASB that needed to be done. So I guess the big line there is there was no financial statement impact for those. So going into just some of the financial highlights, the government-wide. So the restatement of the other post-employment benefits resulted in a 17.9 increase in beginning net position. So that was beginning of, July 1, 2015. So during the year under audit, the net position increased by 6.1 million to 103 million. And that really had to do with a couple of factors, more revenue over expenses, and also some investment in city infrastructure and rehabilitation. And the net pension liability increased 8.2 million. And that really is from CalPERS, and that has to do with a lot of factors. The market kind of took a hit. A lot of the investments in the trust took a hit in January of last year. So that reduces the assets, thus increases the liability of the plan. Going more into the governmental funds and looking at the general fund in particular, it increased by 17 million. And this was a couple of things, about 3 things we're going to talk about here. One was consolidation of funds into the general fund, and that would be the capital improvement fund and the equipment revolving funds from last year. Technically, under GASB rules, those need to be combined in the general fund. So it's a little misleading showing the increase, but it's just think of it as some of the funds combined together. Also, higher than expected revenue, property tax and sales tax came in a little higher than expected, along with transient occupancy tax, and also some cost containment. Department heads were really good about watching their budget and keeping those monies under budget, and also some salary savings there. In the enterprise funds, or the business type funds, we had water and wastewater increase by 2.7 and 5 million, really from current year investment in infrastructure and rehabilitation, along with a little bit of a rate increase. Stormwater increased by 260,000, again, just revenue over expenses, and the cable television fund net position decreased by 1.9 million, and that was really due to previous investment in infrastructure. The cable fund has almost $900,000 of depreciation reflected in that amount, so that's pretty hefty for that fund. And the investment in the fiber optic cables last year sounds like it's still going on this year. The second document that we have for your approval is the Memorandum on Internal Controls, and this is my firm's communication with those in charge of governance of what we found during the audit. And there's certain criteria that we have to bring to your attention. Material weaknesses, significant deficiencies, and other matters. A material weakness is that something material to the city can flow through the internal controls and not be caught. That's really bad. We didn't find any of those. A significant deficiency is something other than a material weakness that can flow through the internal controls and not be caught, and we didn't find any of those either. And the only thing that we have now is the other matters, and that's just anything that's not in the 2 above categories. And we're just bringing to your attention upcoming GASB statements. And the big one that I'm sure you guys have heard and talking about is GASB 75, when we're going to be putting, or I'm sorry, it's not going to come into effect here because of the pension liability, or the OPEB liability. And then the other compliance reports are the Measure A, having to do with the San Mateo County transit funds, and then the TDA funds, and that's grant from the Metropolitan Transportation Commission. And with that, I'd just like to say that the city has already submitted the CAFR for the award, and we're intending to get the GFOA award like we have in the past, or you have in the past. And I'd like to thank finance staff. Darlene and Helen have been great through the whole process. Jim came on last minute, but he's been good as well. Taking credit, like he said, I came in when 99% of it was done, and I'll just step in here. And with that, I'd like to open up to any questions you might have.
Another pat on the back, Mr. O'Leary. Any questions for our auditor? Anyone? Action by the council?
I'll take action, but first, do congratulate staff 6 years in a row, and I know it was started with Jim O'Leary, so thank you very much on that. With that, I'll introduce the resolution.
If I could just for a second, and it is true, I walked in when it was 95% complete, but that 5% was a critical element that needed to be done. No, I'm not going to take credit like I normally do, but I would like to mention, again, Darlene Wong and Helen Yu Scott are vitally important people in the finance department, and I just want to tell you that they do a wonderful job, and they were critical for getting not just the 5% that I'll take credit for, but the rest of it. They were critical because the finance director did leave at a very critical time for completion of the CAFR, and they both stepped up and did a great job. Thank you.
Good job.
Thank you again. Thank you. Introduce.
Vice Mayor Ibarra.
Aye.
Councilmember O'Connell.
Aye.
Councilmember Rico Medina.
Aye.
Councilmember Marty Medina.
Aye.
Mayor Ruane.
Aye.